The real indicator Lee is watching is the divergence between gold and equities. In a true bottoming scenario, you see a scary headline hit the wires, something that should send people running to gold. But instead, gold sells off while stocks turn green. Why? Because it means the fear trade is exhausted. The safe havens have been washed out, and the smart money is already rotating back into growth. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
I think the headlines have been scary. No one wants to see the U.S. in a conflict, but I think it's been spot on to note that markets have been taking this much better than expected. I don't think anyone can say we're bottomed yet, but this is what looks like the makings of a bottom, right? That you get bad news and the markets are taking it in stride. And more importantly, I think we've had a position reset. And so on the other side of this, I think is going to be a lot of opportunity.
What would give you the confidence to say, you know what, that's a sign of a bottom? What do you need to see?
Well, some things like if we go back to April, a simple thing would be the VIX making a spike to over 40. Last year was 80, but we won't get to 80. And then, of course, retracing. That would be a clean sign because that's so much de-risking. Another sign would be we get another scary headline and gold continues to sell off, and then stocks actually turn green on the day because that means we've washed things out. I think we're pretty close.
You're watching oil as closely as everybody else is. I thought it was interesting, some of the notes today. UBS says we expect only minimal or a brief disruption to global energy supplies. We therefore stick with our base case that U.S. equities, will produce good gains this year. Katie Huberty over at Morgan Stanley. Recent geopolitical events unlikely to change our bullish view on equities over the next 6 to 12 months.
I think oil. I think we saw things that kind of made sense to me. Oil spiking on closures or potential closures of the Strait of Hormuz, but the response from Washington, and I think that's maybe more important. That I don't think Washington wants high oil prices into the midterms, and of course it's very unpopular with Americans. I mean, it's a big burden. So I'm going to be in the camp that I'm watching the price action. I think it's encouraging that oil's not surging into the close.
Hey, part of the Huberty note focuses on the AI trade, which has been really interesting, I thought, over the last couple of days. Back, some might say, to that safe haven type price action. I mean, look at right now. Microsoft's up, Meta's up, Amazon's up, Nvidia's traded better over the last couple of days. What do you make of that?
Well, in our view, March was the makings of a bottom because the software, the Mag 7, and the cryptos we thought were like 90% through to their winters or declines. They are outperforming, and I think that's a sign of leadership. But fundamentally, you're absolutely right. If we get global trade disruption, you still need AI, and you still need the Mag 7. So I think they're actually good fundamental stories.
For a company growing at 30% to 40% a year, a 20x PE is an extreme discount. It suggests that the market has already priced in a global trade war, a massive recession, and a collapse in AI demand. Tom Lee agrees, noting that while the headlines are scary, the leadership for the next bull market is already obvious. It's the software giants, the Mag 7, and even the cryptos that have been washed through the bottom.
Yeah, good to see you, Scott. So, I mean, I think, if you look throughout history, geopolitical conflicts are rarely a long-lasting negative catalyst for markets. They tend to be short-term isolated events. And, once we get some clarity on the event, the de-risking kind of tends to reverse. And there's some things you asked Tom, what do you need to see a tradable bottom? So there's things we watch similarly to kind of give us clues to that. One thing he mentioned, the VIX, we look at the VIX curve. So looking at spot VIX versus the second month future, that was inverted by about 4 points. That's the most since last April up to the lows. So there's certainly room for it to invert more, but that's a sign that you're probably in the later innings of the sell-off when you finally see that inversion. As far as oil goes, we look at the energy stocks relative to oil. So this morning, crude oil was up about 8%, but the energy stocks, if we look at the XLE, was unable to take out yesterday's high, and in fact, it traded red well before the recent headlines that caused oil to give up its gains. So those were two signals we were watching. And I think finally, if you look, kind of at the internals of the market, what's working, what's not. We kind of have a first in, first out with areas like software, which has been, that was one of the first groups that went green this morning. So it seems to us like that is fully washed out. And then finally, they're finally selling the leaders, right? The memory stocks, I think, were kind of the final holdout in this bull market. We saw Korea, which is an area we were cautious on last night, down about 7%. So a lot of the memory names trade in sync with Korea. So we're finally seeing those last holdouts kind of get sold. And I think that's another sign that we're probably towards the later innings here.
All right, we'll make that the last word. I appreciate you joining us with a really good look and a simple to understand one on all things that are happening from a technical standpoint, perhaps within the market. Let's bring in now the Wharton School Professor of Finance, Wisdom Tree Chief Economist, Jeremy Siegel. Fundstrat's Tom Lee, of course, is still with us. Professor, it's good to see you. Love your thoughts here on what you make of these market moves over the last couple of days based on your experience.
Yeah, well, when I sent my notes over at noon, Scott, I said we have to keep the Straits of Hormuz open. I said that was critical, and the news we got over the last hour is really good about that. I certainly expected the U.S. to provide insurance, but we need the escorts, and I think success on escorting tankers through would be a big political victory for Trump. Some of the early developments that we had hoped for, the rising up of the Iranians, the replacement of the supreme leader by someone that would negotiate with Trump, that has not happened so far. So I think the next step is if we can keep that straits open. Iran has said, we're going to prevent tankers from going through. That would be a political victory, and I think that would be very, very positive for the market. But that's going to be something that I think we all want to see over the next week or so.
Professor, you've seen a lot of markets during times of turmoil, certainly war and other events that have shaken investor confidence at times. Are, in fact, those moments what the charts have suggested to Jonathan Krinsky? Missiles fly, time to buy?
Yeah. Generally, the fright of war and the angst of war has been a time to buy. When World War I started, people, the exchange was so nervous that it was going to be a total collapse. They closed the New York Stock Exchange for 6 months, which is the longest period of time in U.S. history it's ever been closed. But the war actually happened to be good for the U.S. economy. So that when they reopened it, stocks were rising, and then they just absolutely soared up to new highs. So that sort of told people, you know what? Wartime is not always a bad time for the markets, and certainly we're not in World War I, World War II. Certainly, let's hope it doesn't get that way. But it had those periods. When VIX is above 20, I know Tom wants it to go above 40. That would be the spike that would probably mark the bottom. But it means there's an awful lot of hedging that is going on, a lot of risk positioning. If we get through this war with some of our objectives through, I think we're ready for a big bull market in 2026.
You want to opine on that?
Yeah, I agree with almost everything said by both Krinsky and Jeremy Siegel, that this is all the hallmarks of creating some good opportunities. So I think investors do need to look beyond the headlines, maybe think 3 months, maybe even a month forward, and we just have to kind of wash through this bottom. But we already know where the leadership could be coming from. It's the software, the Mag 7s, and even the cryptos.
Professor, does this, like Tom's suggesting, perhaps rekindle the mega cap trade in some respects for the idea that at times of turmoil within the markets, these have tended to be a bit defensive?
Yeah, well, I remember once we thought that Apple was the big defensive stocks. When there's times of potential recession or international disturbances, really no stock is totally immune. We really need to get through this, I think, for the bull market in both segments of both the value stocks and the rotational stocks as well as the Mag 7. But, let me tell you, when you take a look at some of those Mag 7 stock like NVIDIA that selling in the low 20s, some even say lower in terms of price earnings ratio, that is an awful lot of discounting, let me tell you, for a company that has been growing 30-40% a year.
Yeah, you would agree, though, in the bigger picture, as we wind our conversation down, that energy, that complex, and oil prices are the most important thing to watch right now. Not only from a sentiment standpoint, obviously for the economic fallout perspective, and then how it relates to the Fed as well, and what its road
politics
ahead is going to be.
Yeah, and as Tom mentioned, I mean, we are coming to the midterms. And, we have had low oil and gas prices under Trump. Now, the wholesale price of gas, let me tell you, has gone up 50 cents over the last 3 days. Now, it takes about a week to work into the pump. I worked it out that if it does go up by, 50 cents, we will be in the middle of what gas was during the Biden administration, but no more Trump discount that he was counting on early on. So it's not only a question about the Fed does and the economy. It really is going to be important for the political outlook.
Tom, you get the last word.
Yeah. Well, I'd say I think investors just need to be kind of patient, cautious, and wary, have a bit of firepower. But I think opportunities are emerging.
All right, gentlemen, I appreciate very much the conversation as always. Professor, we'll talk to you soon. Tom, thanks for coming.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.